guys, welcome to Coaching with Chris. I'm pretty excited because today we're going to talk about buyer's agent commissions. And I've watched Josh Mettle from afar, like for years and years and years. And now I get to finally have a conversation. We get to kind of geek out a little mortgage stuff. So I'm excited to be able to bring Josh in. Not only is I consider him to be one of the greatest in the mortgage business, but I think he's done a phenomenal job of creating a financial mortgage experience. So Josh, welcome to Coaching with Chris.
I'm glad to be here, my friend. This is going to be a lot of fun, and what an opportune time, right? There's plenty of challenges, which means there's plenty of opportunities. So I'm excited to dig into those with you and your audience.
You know, I think everybody wants to know everybody's story. Everybody's got it. The funny part is we all got a story, and yet there's so many connections of like, oh yeah, that's part of my story too. But how did you get into mortgage? Like, what's the story?
Well, you know, like everybody, I was on a very different path, or at least like most people. I was actually played a couple years of college football. Then I got injured in college football, ended up coming back to Utah, my home state, and then started working out at a gym. Then I got hired at the gym as a sales manager and a trainer. And I ended up training a guy who owned a mortgage company. It was very classy, Chris. It was called The Money Shop. And
nice.
It was kind of like a half mortgage, half pawn shop. Our processors also had nighttime dancer positions. It was a very classy establishment. But I quickly realized, you know, I could either continue to go towards my degree and go on to get my MBA, or I could make $3,000 tonight. So I stayed late and worked the leads. And that was my start, man. Yeah. Funny story, just for, you know, those of us who are not familiar with the grind that a lot of us are faced with today. I used to have a rule, and this was my first rule of success in the mortgage world. I would either call 100 leads, which we had very low quality leads, as you might have imagined, or I would wake 3 people up, or I would have 3 applications. And that's the only way I would allow myself to go home at night. Call 100 people, wake 3 people up, which told me it was way too late to be dialing, or take 3 loan applications. So that's how I got started in the mortgage industry.
And that was the recipe.
That was it, man. You know, it was funny. I went from not being able to spell mortgage to being the number 2 producer there behind the broker who had, you know, some real established relationships, from number 1 to number 2 in the first 45 days. And everybody was like, oh my gosh, what are you doing? And I'm like, I don't know. I'm calling 100 people. Well, why are you doing that? Because that's what the boss told me to do. He said, if you call 100 people a day, you're going to get loans. You're going to make a lot of money. And I'm not that smart, but I know how to follow instructions. So that's what I did.
You know, years ago, when I started off selling cars in 91. And selling cars in 91, about 2 years in, a guy come to me. I was struggling. Guy come to me and he goes, you know who the smartest salesperson is? I go, no, who is it? He goes, the newest. He goes, do you know why that is? I go, no, why? Tell me. He goes, because they'll do anything they're told because it's part of the job. And I'm thinking about your story is that, no, hey, Josh, this is what you do. This is part of your job. This is how you do it. And then voila, success. But we like overthink things and change it, manipulate it, create it as more of a voluntary thing than a mandatory thing. And then we don't get the result. And then we get frustrated. Totally. Here, you just follow the plan.
It's pretty simple. Call 100 people. It's not fun. It's not sexy. Right. It was long hours, but boy, I learned the business fast. I learned how to talk to customers fast. I learned how to figure out how to prescribe whatever my product was to be the right solution for their problem. And I learned very, very quickly. So, you know, it's interesting, Chris, you know, as we sit here today in 2024, many of us that have been in the industry for a long time are resistant to adapting back to that kind of work ethic. You know, we've had periods in our career probably where we really grinded it out and worked hard. And as a product of that labor and the ability to fight through the resistance, like it's not fun to call 100 people because I know I'm going to get hung up on 80 times.
Right.
but I'm going to get 20 people to talk to me. 10 of them are going to curse at me, but the other 10 are actually going to have a need for a mortgage. So to push through resistance day after day, it's not fun, but it is what it takes in these markets. And I think we are in one of those markets where, since the 80s, we saw lower and lower and lower rates. We were kind of racing a race on a downhill. It's like a ski race and everybody's going downhill. It's not really hard to get momentum. And now we're in that part of the race where we have flat or uphill terrain, and it's work. You got to sweaty, dirty stuff that isn't as fun. And those who can reset their expectations and embrace the suck, if you will, are going to win at this. There's definitely some inside games, some inside work we need to do inside of our head as it relates to mindset and our mental perspective. But we're definitely in that new era where we got to get back to that place where we're like, hey, if I want success, it's 100 phone calls. That's just what it takes. So we got to re-embrace that growth mindset again that maybe a few of us have lost over the last few decades.
So tell me about the Loan Atlas. I'm fast forwarding all the way up. Tell me about the Loan Atlas.
Yeah. Well, my coach, Tim Brahim. Tim started coaching me about 5 years ago now. And Tim takes a very different approach. I've been involved in many coaching companies over the years and experienced a lot of their rallies. Tim takes a really inside out approach. In other words, the human can only have so much external business success if they're mucked up on the inside and they have self-limiting beliefs and they're struggling internally. Humans will have a nature to self-destruct just when things are going right. So how do we identify those things that we're stuck on? How do we fix those things? And therefore, how do we unlock the potential for the external business success? I mean, I'm oversimplifying things, but that's kind of an overview of how his coaching methodology is different. So what Tim has done with the Loan Atlas, and those of you that are familiar with Loan Toolbox back in the day, we're going back several, decades.
We're going back a few years, by the way.
A few years, by the way. Yeah. So if you haven't heard of it, that's okay. You're probably not Gen X. That's okay. No worries. So this is Loan Toolbox for those that are familiar on steroids. It is a learning platform. It is the master's degree for the mortgage industry. And there's 8 disciplines of mortgage origination mastery, starting from foundational knowledge to a system for selling, a process for customer service. And it works its way up, kind of like traversing your way up a mountain, if you will. And at the top of that mountain is legacy and freedom. And essentially, and there's 6 business disciplines and 2 personal disciplines. And essentially what Tim is teaching us is, if you want to master this very challenging game that is mortgage origination, and to build the team around you and to really grow a business as an entrepreneur, these are the levels of the game you have to master in order to get there. And he does it in that same format, Chris, where he helps get you unstuck on the inside first, get over your own personal considerations, beliefs, self-limiting beliefs on why I'm not worthy or why I can't accomplish that or why that person has an advantage over me. Like, let's get rid of that stuff. Let's figure that out about ourselves. And then let's unlock all these levels to grow our business. So it's an e-learning platform. It's a community. It is a group of 18 faculty members that have personal production, over $29 billion in personal production in their careers. And they are coming together to create what is the MBA for the mortgage industry.
That's so cool. You're coaching for them?
Yeah, I mean, we don't call it coaching because we don't really look at ourselves as a coaching company, which is a little bit of a different slant. We really look at it as a learning platform. And so I would be, instead of coaches, we call ourselves faculty members. And really what our goal is to teach you all the things that we've mastered in our career. So for me, I focus on marketing. I focus on building a perfect week and really maximizing your time to get the most amount out of it and really organizing your day, the rituals that create success. I'm actually staring at a quote here from Jim Rohn. He says, success is nothing more than a few simple disciplines practiced every day. That's one of the things that I have a lot of fun teaching how that can be done inside the mortgage industry. And then I do a lot of my teaching inside of the legacy and freedom vertical, which is the top step or the top level of Loan Atlas. And essentially my goal inside the Loan Atlas is to help 1,000 mortgage professionals to create enough passive income that they can overcome or cover their monthly household expenses, so they're not tied to their mortgage income to survival. I want to free people from that. So we take our mortgage dollars, we convert that into investments that create cash flow, so that if we see 8% interest rates again, or we see a down market, we're not like, living off our home equity lines and 401k accounts.
Yeah, and just giving a little shout out to this group. You guys have a really good calculator that just going through not only talking about how many leads do I need to be able to get to my goal, but the average conversion rate that I need to be at that equals to the total amount of loans, to equals to the total amount that I can get my guaranteed, and then to my savings. Like, you concentrate on savings, which is something that is near and dear to my heart. But then I love the way your guys' calculator works out. So I know you can go to the website, you can start to play with that calculator, and then maybe get more involved into getting more information or getting into Tim's group.
That's good. Tim's business planning calculator. And it does exactly as you say. It starts out with saying, all right, what's my monthly nut? How much do I need to make before and after taxes to cover that? And then where am I going to get that business from? And then if I'm finding myself in a deficit from that number, or if I want to expand on that number, what are the activities that I need to engage in on a daily basis that leads to that number? So it's an equation. So those of you that are nerds like me and you want to see the numbers and understand how they work and how the levers can propel your success or detract from your success, it's a really, really valuable calculator. And like you said, it's inside the Atlas. I'll actually leave a link at the end of our call so folks can get more information.
Cool. So we're talking a little bit about buyer's agent commissions and how we're going to thrive in 2024, basically using this in a sense as an advantage. But, you said something, if we could just go to a gravel road real quick, you said something that it's just been a huge hot topic with mortgage originators across the country, which is designing this week and designing your calendar in a sense to fit this. You're teaching this on an ongoing basis. What do you feel is 2 to 3 tactics that as an originator needs to change today to be able to have a better week?
Great question. So I did a presentation with Dave Savage and Todd Bookspan and the Modern Mortgage Summit this year, and I called it the 5 traits of the millionaire mortgage professional. And I'll maybe just rattle those off because I think it's the secret sauce. And I learned these traits. Number one, I came out of the Great Recession on the precipice of financial ruin. I had about 57 single family rental properties that were a couple $1 million upside down, meaning the mortgage balance was more than the net worth. I had nobody around me who was surviving this thing. All of my clients and my business up until that point was built through serving real estate investors, and then eventually builders who sold homes to real estate investors. And then for further diversification, realtors who worked with builders who sold homes to real estate investors.
Yeah.
I thought that was a diversified pillars of my business. It turns out it wasn't all that diversified. And I remember when the music stopped here in Utah, I looked around and I went through my phone, Chris, and honest to God, man, I couldn't find a single builder, a single referral partner, or a single client that wasn't either going through bankruptcy, foreclosure, short sale, or exhibiting suicidal tendencies. I mean, everybody was wiped out. All the loan officers in my office were going through the same type of situation. I had zero model for success. And I ended up hiring Coach Bill Hart and Building Champions on a one-on-one coaching agreement for a year. I stroked a $7,000 check that I did not have. And I just went all in and said, man, I have no lifeline here. And you're my guy. You like, help me through this thing. And over the next year, we created or began to create, and he helped me discover these 5 disciplines of the millionaire mortgage professional. And now looking back on that, going back 14 years, I realized, holy cow, those rituals, those things that I've adopted in my life as daily disciplines have really separated me from the pack in a lot of ways. And I'm watching the mortgage professionals on my team exhibit those and model those, and man, their success is going crazy. So I'll share them with you real quick. I'll just go over them because I think it directly answers your question. So trait number 1 of the millionaire mortgage professional is the moon is our sunrise. And what I mean by that is we wake before the sun rise. If you talk to really successful people who've been successful for a very long period of time, they are capturing that pre-sunrise stillness, that place where they can think, that space where they can actually work on their business instead of just working in their business, where they can be intentional and at cause versus just reacting to a low appraisal or a condo issue or all the things that mortgage professionals have to react to. There is a very precious amount of time each day that we have before the sun rises where we have agency, dominion, and control over everything that we do. Then once the sun comes up, you've got kids and text messages and dings and pings, and we become reactionary. So that's number 1. And I've seen that the people in my team who have started waking up crazy early, like, my alarm still goes off between 3:30 and 4:30 a.m. every day. And I do it because I love it. I'm powerful. I can create. It is a magical time. So that's trait number 1. Trait number 2 is that we stand guard at the door of our mind. And that's actually another quote from Jim Rohn, who, as you can tell, is a mentor of mine. And what that means is, like, if I go back to 2010, I've got these 50 some odd rental properties. They're all upside down. Everybody's obliterated. And I can either focus on everything going to hell in a handbasket in my life, or I can stand guard at the door of my mind and I can put my attention on what's going right, what opportunities are in front of me. But if I don't learn that that's a skill, like I'm a powerful, creative being. I get to decide if I'm going to look at what's going wrong in my life or what's going right at my life. But if I didn't develop that, and I think it's true today as well, if we don't develop and cultivate that skill and we see the negativity creep in and we just go, we just shut the door. We go, nope, not today. We're not doing that today. We're gonna focus on the new business plan. We're gonna focus on the new vertical. We're gonna focus on the new marketing activity, right? So we have to stand guard at the gate of our mind, at the door of our mind. And then the third one was, we work on our business before we work in our business. I mentioned that before when I said we rise before the sunrise. This is a Michael Gerberism from the E-Myth. And Michael says, have you read that book, Chris?
Yeah.
So good.
I love this quote.
So good. And basically what Michael says is the trap that entrepreneurs fall into, and we're all entrepreneurs, by the way, the trap is that we go to work working in our business and we never do the things to systematize, to scale, to grow, to be able to delegate our tasks over to somebody else so that we can continue to have elevation over our business and grow it holistically. And I realized that the myself and the people on my team who wake up early, they stand guard at the door of their mind. They work on their business before they work in their business. Holy crap, everything changes for them. They're no longer just this reactive originator stuck on the hamster wheel, running a program every day, which is chase your tail until you can catch up. It's like you actually step out of the matrix and you go, okay, I can see things clearly. I have space. I can think, I can plan, I can execute. I work on my business before I work in my business. Trait number 4 is we win by noon. Yes. Just, really simply, I realized that, we all have 24 hours in a day. Let's say we sleep for 8 hours. That gives us 16 hours to crush it. What I figured out was the first 8 hours of my day is 10 times as valuable as the second 8 hours, because that first 8 hours, I'm up before the sunrise. I'm doing the things I need to get my mind right, my body right, meditation, exercise, working on my business. Then I go straight into prospecting and I prospect hard for 3 or 4 hours and boom, then it's noon. Then I can be reactive and I can react to the rest of the things around me. But the first 8 hours, I want to have complete agency over. I want a script just so it is like a sheet of music that I'm going to play every day. And of course, kids get sick and sometimes you get off track. But I found out that if I did this 90% of the time, I could really move my business forward. And then the last one,
if you
Chris,
just did that, you'd have
just did
huge
that.
results.
Just did that. I mean, really, that's it, right? It's control the first 8 hours of your day. Allow yourself to be reactive to appointments or low appraisals or whatever after it. But if you just nailed that, your business would completely change. And then the last one, Chris, I know you're big on, financial literacy. Rule number 5 or trait number 5 is we pay ourselves first. We intentionally take savings before we pay bills or go buy new things. I met a guy, I did a podcast with a gentleman by the name of Justin Chittister. He spent 4 years working with elderly couples that had entered their retirement age and they had insufficient amount of money each month to meet their obligations. So it was like a public service that he was donating time to as he was getting his master's degree. When he came out of that and he finished his master's, he started his own practice and he started working with very wealthy families. And when I was doing the podcast with him, Chris, he said, there's an equation for financial scarcity. It's very simple. And there's an equation for financial well-being and abundance. And it's also very simple. And here's how it goes. The equation for financial scarcity is income minus spending equals savings. What comes last in your priorities is what will benefit last, right? It's the last in the pecking order. And he figured out that the equation for financial abundance is easily as simple: income minus savings equals spending. And I thought, man, what straight out of The Richest Man in Babylon, right? Pay thyself first. It's such a simple equation, and yet I bet if most people were being honest with themselves, that's not the equation that most of us are running. So those are the 5 traits. And that is really how I organize and stay on my game for productivity.
Well, would you say that these 5 traits changed your life since 2010?
Bro, I am not like, I have no reason to have, I have no pedigree to have success. I wasn't born into a wealthy family. I was a solid C+ student. I was 265 at my heaviest. I was raised by a single mother in and out of financial scarcity. There's no reason for me to have achieved any level of financial or career success. It is only these traits, in my opinion, that have led me over a long period of time, like, the compound effect. You just do the right thing, as Jim Rohn says, right? Success isn't complicated. It's a few simple disciplines, practice relentlessly every day over a long enough period of time, and you look back and you go, wow, look how far I've come.
What a cool story.
Thanks, man. Appreciate it.
What a cool journey.
So fun. Yeah. And now, now this is the kind of stuff that I really enjoy sharing inside the Loan Atlas, because there's some new originator out there that's trying to figure out what's the path. How do I get from here to there? And my goal is to be able to say, like, this is possible, and here's the steps to get there.
Yeah. I think that if you're listening and you're a new loan officer, you got to listen to what Josh said in the very beginning. Like, in a very short period of time, he became number 2 because he did the work. And if you're willing to do the work, you don't need, I'm a C student, by the way. You went to college. I did it. I sold cars. That was my college.
Good education.
It was a great education. But I'm thinking about this. There's a lot. You don't have to say, well, I need to be in the business 5 years before I get to the number 1 in your company. No, you just got to go work smarter, work harder, and it will happen. But what you and Tim are doing and teaching, getting all the inside stuff right so that you can be good on the outside. Like, I don't know anyone else doing that right now in coaching.
I mean, that's really
however you call it. I feel like, Josh, you got me on the pins and needles to say the word coaching, because I don't want to get a call from Tim saying it's not coaching. I don't know what to call it. But so I'm just like, it's coaching to me, but for you, it might be something else. But like, this is cool.
The reason why we say we want to differentiate from coaching is we actually feel like the Loan Atlas curriculum could fit alongside any coaching program, right? The coaching program has this, usually led by one or two coaches that have a viewpoint of how the business is done. It's successful. They can model it. It's replicatable, and they can create accountability to that system. But in order to execute that system, you need to learn these 8 disciplines, personal and business, in order to unlock that success. So we don't want to, we don't want to position it as a coaching company, because it's really an educational roadmap. And you can put a coaching program on top of a roadmap, and they work beautifully together. So we're intentionally trying to not create any type of competition, because we don't look at it that way.
Right. Ah, what a great way to look at that. Thriving in 2024, buyer's agent commissions. You've got some tips and tricks for us that we could go implement right away that could change our business, make a difference in our business. And I'm excited I'm kind of excited to see where you're headed with this and how you're working it and how you're presenting it to the agents out there for growth in your mortgage company.
Cool. Well, I'm happy to share it. Okay. So 2 things before we kick in, and then I'm going to, in fact, I'm actually going to hit the present and share screen now. And then I think Aaron will just hold for just a second before we actually share that, but I'll get it teed up. Can you see my screen already?
I cannot. Maybe Aaron could.
Okay,
but
cool.
Can't.
Right on. Then he's holding it until he's sharing with everybody else, which is perfect. Vidyard's just a little different than Zoom or Teams. So 2 things I want to share. Number 1, I have a little bit of an advantage where my one of my best friends in the world also owns a boutique real estate brokerage. He's run the Utah Berkshire Hathaway franchise. He's run the Sotheby's franchise. So he's run several big brands locally. He now runs his own boutique, and we're really good friends. Like, you can say anything to each other, and it doesn't, you don't have to worry about offending each other. So about a year ago, I started joking around with him, and I'm like, Jake, do you know how screwed you are? And he's like, well, what do you mean? And I'm like, there's not going to be any more buyer agent commissions anymore. He's like, well, what are you talking about? And then we started jostling back and forth, and he started researching it, and I started researching it. And of course, neither of us thought that really buyer's agent commissions are going to go away. But we started to have these really interesting conversations like, okay, what's the best case scenario and what's the worst case scenario? And likeliness is it ends up somewhere in between. But how could we prepare our teams for the worst case scenario? And so that gave me about a 12-month head start to play with tools and the idea of how do I really start to look at different lead pillars other than referrals from buyers agents. And I don't know if you know this, Chris. I learned this in doing some research. The average licensee, real estate licensee, closed 1.43 transactions in 2023. Not 1.43.
The average?
The average, 1.43, which means the average realtor made minimum wage, pretty much, right? Unless they sold that realtor sold a $5 million home, which is unlikely. So if we believe that this thing is going to reduce commissions to some extent, if we believe that it's going to make it harder for buyers agents, because remember, up until this point, the seller paid the listing broker via cooperative compensation split it with the buyer's broker, and the fee for that buyer's broker didn't show up on the buyer's settlement statement. It showed up on the seller's settlement statement. Now there's a capital flow change. What I mean by that is the seller sells, they pay the listing broker, and then they decide if they're going to do a concession that is going to pay, that is going to go to the buyer. And then the buyer obviously is going to use that to either pay buyer agency fees or to cover closing costs. But it adds a different wrinkle where the buyer now has knowledge, and it's their concession. They have knowledge of what the buyer agency fee is, but it's their concession. And it's likely that when the money starts moving in different directions, that the behaviors of the buyer starts to change over time. So I started to think to myself, okay, how could this play out? Could buyers decide they wanted that concession to go towards their closing costs, or to buy out mortgage insurance, or to do a temporary buy down, and they wanted to forego buyer representation? Could this possibly work out where buyers hired an agent that would do a la carte, like, Chris, hey, if you want me to write up your purchase contract, it's $4.99. If you want me to negotiate your contract, it's another $4.99, so on and so forth. Could this play out where attorneys and title companies and perhaps even realtors hired a bunch of paralegals, and the paralegals at an hourly rate did a lot of this stuff? And so I just started to think, there's a lot of different ways this thing can go. I don't know for sure, but I believe it's going to result in less dollars going through the real estate system, not more. I believe that's going to result in less buyer's agents, not more, because the average agent only did 1.43 transactions last year. And so how do we prepare for this? Right. So let's go ahead and share my screen really quickly if we could. I'll kind of set this up. We'll roll through a few slides, and then we can go through like some Q&A. Oh, the other second thing I wanted to say real quickly, Chris, is I created an implementation guide, which is basically the entire thinking and process that I've been teaching my team over the last 12 months. And I'm going to give it to everybody as a download at the end of this. So if we just kind of hit this high level and you're like, hey, great ideas, Josh, I have no idea how to implement any of this. You'll get it's literally like a 17-page checklist with scripts, everything you would possibly need to implement this in your business if you want to do so. Can you see my screen?
Yep.
Okay, cool.
Perfect.
Right on. I just found this interesting. This is an agent out of Houston, and I'll just kind of skip in here at the third paragraph. He says, in 5 years, I've now had 3 folks that wanted to view directly with me as the listing agent, with 2 being in the last week. And basically what he's saying is, I'm starting to see buyers go directly to the listing agent rather than showing up represented. Things may be changing. And by the way, this had 69,000 views. So we have to think about how many thousands, millions of consumers are reading the Wall Street Journal and the New York Times headlines that say, good news, you don't have to pay real estate commissions anymore, which we know isn't true, but they're all pieces of information that may lead to a change in buyers' behaviors. They're starting to see things like this from listing agents that go, oh, whoa, wait a minute. I can just go straight to the listing agent. I don't have to go through a buyer's agent. And I think these things will start to, I think this will lead to a change in behavior. So I started thinking, how do we go to the listing agent? Like, how do I get straight to the listing agent, get their attention, and earn their business? Let me quickly just, I'm going to just kind of move forward her a little bit. So I just applied the Donald Miller process. Mm-hmm. Donald Miller, phenomenal marketer. He's a phenomenal business thinker, and he wrote a great book called Marketing Made Simple. He's written several books. But Donald says, listen, if you want to capture somebody's attention, doesn't matter who it is. If you want to capture their attention and you want to gain influence over them, follow this 4-step process. Number 1, identify their problems. So leave your perspective and enter their perspective and think about what's going on in their life. Number 2, show empathy to them that they're experiencing this pain. Number 3, demonstrate authority. How can you help them? What is it? What tools, resources, experience, expertise do you have to help that person? See, what most people do is we jump right to step 3. Here's all the things that I do. I know I have. And the person on the other side is going, cool. I got to get Xander to basketball practice, bro. Like I got a life over here. But if you start talking about their problems and you go, oh, that's my problem. Oh, yes, it's making me feel like crap, just as you're saying, as you're showing empathy. Oh, you have a solution for my problem? Now you deserve the space in my brain and the attention once you've shown me that you're going to solve my problem with your authority. And then number 4, create a specific call to action. So I just said, okay, well, if I want to become more valuable to listing agents, I'm just going to apply this 4-step process to gain attention and influence over listing agents. So I said, all right, let me just jot down a couple of the problems that I think listing agents might be facing. Number 1, it's the least affordable housing market since 1984. Undoubtedly, every listing agent that has been in the business for a few years has customers that are feeling trapped inside their current home, want to move up, want to move school districts, want to move for one reason or another, but the payment has them locked in. That's a problem that is limiting the number of listings that every listing agent is having. How could I help them solve that problem? Number 2, 83% of potential home buyers believe this is not a good time to buy, according to Fannie Mae. And the same could be said if somebody has a home to sell, then they're going to turn into a buyer, right? So we could help them. We could help them dispute that belief. Number 3, many first-time buyers don't believe it's a better or buyers believe it's a better financial decision to rent than it is to buy. I don't know if you saw the New York Times just came out with a rent versus buy analysis tool, but it is definitely skewed towards making the point that it's better to rent than to buy. And like most mainstream media, they give about 1/3 of the information. They skip the rest of the stuff that is really important to make a good decision. So we can help people dispute that belief. And then number 4, they don't have the time, systems, or knowledge to aggregate, sort through, and qualify mass buyer inquiries. So if buyers are going to, and I'm not saying 100% of buyers, but even if 10% of buyers are going to decide that now the concession comes to me as the buyer, and I get to decide what I'm going to do with that concession, I'm going to buy down my interest rate, I'm going to buy out my mortgage insurance, I'm going to cover my closing costs, or I'm going to pay 3% to an agent. Hey, I'm self-employed. I understand how contracts work. I have bought 2 houses before. I think I can do this on my own. I think there is a percentage of the market that is going to start going to listing agents, and listing agents don't know how to aggregate buyer leads and to figure out which ones they should be working and which ones they can't. So that's an opportunity for us. So as I'm thinking through this, Chris, I go, okay, what is the tool that would enable me to identify these agents? And then how can I get some insight on their listings so that I can bring value and try to solve some of these problems? Before I move on, do you have any comments, anything else you want to add here?
Well, I'm just thinking like, you're really making me really think about a few things, but I do believe that this is going to become a huge negotiating item.
I do too. I don't know that it's going to be August 1st or the immediately the day that this thing rolls out, but this is going to be in the media. If you're on X, if you're on Reddit, if you're in any of those kind of like social chat groups, buyers are saying, look, a buyer representation is not worth $18,000. The median home price in Salt Lake City is about $600K. And people have just kind of had it. Now, is there a value associated with that? For sure. Does the person in a W-2 job that works at a call center, do they need full representation? Probably so, especially if it's their first home. But if it's someone who's self-employed, has done 4 or 5 processes, maybe an attorney, or has some legal background or financial wherewithal, or is comfortable with negotiation, do they want to pay $18,000 to move down the street? I don't know. I think there's a decent chance that there's a disruption in that lead flow, and I just want to be prepared if that comes to be true.
Now, if I found you a listing, I'm a realtor. I'm a buyer's agent. I'm a specialist. I found you a listing that you couldn't have found it. You never knew it was on the market. And I'm giving you exclusive opportunity to be able to view the property and buy. I'm probably paying.
For sure. 100%. And that goes back to, I think, I think there's 3 real opportunities this year. Number 1, get our minds, our schedules, and our daily routines tight, because this is an uphill battle. This thing is not over. We're not going back to 4% mortgage rates anytime soon. Like, get mentally, physically tough and create a rituals and routines for success. That's opportunity number 1. Opportunity number 2, how do we help our buyer's agents amplify their value proposition? Because they now have to say that, up until this point, since the 90s, when the cooperative compensation rule came about, it was really simple. Hey, Chris, sign this piece of paper that says I'm going to be your representative and you should use me because I'm free. When the price is 0, my value doesn't have to be very high. Now I can't say that, right? Now I got to say, hey, it's going to be an $18,000 or 3% fee, and we are going to try to get the seller to pay, but there's no guarantees. And if the seller will only pay 1% in concession, you're responsible for the delta, and you're going to pay me that 2%. Now, all of a sudden, that value proposition has to be north of $18,000 in value. So how do we as mortgage professionals help our buyer's agents amplify that value proposition? And then opportunity number 3 is, if some portion of the buyer pool is going to elect to self-represent, or maybe just pay a paralegal or somebody to write up the contract, and they're going to do the rest of the transaction, then a portion of those leads are going to go to listing agents. And then how do we monetize that change in buyer behavior? So those are the 3 opportunities that I'm like really harping on and teaching our team this year.
Yeah, I'm sitting here thinking, my question when I call a buyer's agent, which would totally start to add value, which is, Josh, what are you doing today to build and to increase your value to all of the buyers that you're working with today, knowing that they're hearing about through the media all of these rule changes?
Great script.
And then shut up.
The best communication I saw from a buyer's agent came from a very well-known and respected female realtor in our community, who wrote a very non-biased, straightforward email to all of her clientele. And I'm on her distribution list. And she said, you're probably hearing a lot about buyer agent commissions. Let me shoot it to you straight. And then she just went through. It wasn't a sales letter. She wasn't pitching her services. She just said, here's the rule changes. Here's how this will change things or not change things. And here's what we do to earn our compensation in every transaction. And it was really impressive, but she's not skirting the conversation. She's like, right bullseye. Let's have the conversation. I'm open to it.
She's hitting it like a buffalo.
She's hitting it like a buffalo. She's running into the storm versus away. It's exactly right. Yep. All right, let me jump into, I'm going to re-share my screen again. If you can help me, Aaron, just a sec. And I'll run into I want to give people a little bit of meat here. Okay. Like so the tool that we use is list reports. You don't have to use this tool. It's just what we use. You can take this same strategy and use a different software. Inside of list reports, there's this tool called Agent Intel. And the thing I like about Agent Intel is I can put different areas in. I can look for agent listings in the area. So when I put this together, there were 461 listings in Salt Lake City, Utah. Median days on market was 64 days, which tells me every listing that's been listed greater than 64 days, there's probably a reason why that home isn't selling, and an opportunity for me to help that listing agent, because that listing agent is worried that they're going to get fired at the end of the 90 or 120 days if they don't get that home sold. You can also search by the agent's name, the company, or the listing address. And then I just search by the oldest homes on the market. So if you don't have list reports, just go to whatever data aggregator you're using, Zillow or Redfin, whatever, realtor.com and look for homes that have been listed for long periods of time. So here's what I found in my local market. I'm finding homes that are at or below the median price. So they're not overpriced. And this home been on the market for 136 days. It's a beautiful home in a beautiful area. This one's been on 136 days. So I've just identified a problem for a listing agent. That's step number one in Donald Miller's influence and authority equation. Great. Now I found a problem. Okay. Now I can search through in list reports and I can kind of go agent by agent. And I see Susan Boyer, for example. She's got 6 active listings. She has 28 buy-side transactions in the last 28 months. Now I can approach Susan and start to solve some of her problems and see if I can get her attention and authority. So let me just kind of jump forward a little bit. This was one of the listings that Susan had. Look at this. There's an open house this weekend. This property had been on the market for about 120 days at the time. And I'm trying to figure out, why has this thing not sold? I mean, the house is, it's a little dated, but it's beautiful. It backs up to the mountains. It's in great repair. And I think to myself, this has got to be payment. Like, it just has to be payment. So we go inside of MBS Highway. You use a seller contribution tool. And I say, hey, Susan, are you aware that the payment on this house is $3,654 a month? You're going to need about $100K household income to qualify for that property. What's your seller's payment on this house right now? Oh, like $1,200. Do they know that a buyer's payment's going to be $3,600? And now that it's been listed for 120 days, are you considering a price reduction? Because let me show you a couple strategies here. If you do a price break of 4% or about 20 grand, you save $122 a month. Big whoopee. But if you do a 3-2-1 buy down with that 20 grand, we drop the payment by $847. And look, that's what DR Horton's doing. They sold 83,000 homes in 2023. They stopped selling the amenities and the features. They started selling the payment and the below market interest rate. And the narrative was, hey, why buy an existing home if you can buy a brand new home for a cheaper payment? So what if we took a play out of their playbook and we rewrote your listing description? And now your listing description says, save as much as $847 per month on your mortgage payment. With a full price offer, seller will pay $20,000 towards temporary mortgage rate buy down, rates as low as 3.875 for well-qualified buyers. So, I'll quit sharing.
Simple.
Here. It's simple, but we're just addressing the problems. Like, if we identify the listing agent's problems, and then we mobilize the tools that we have as originators to help them overcome those problems, we create influence and we obtain their attention and their eyeballs.
So just thinking, I'm creating this perfect week. And if I'm going to do this and I'm going to put a metrics to it, how many of these should I do in a week to prepare? And so that I had the activity for the weekend.
Yep, 100%. I've asked our team to just do 1 a day, 5 a week. It's simple. It's so simple, 1 a day. And for me, Chris, you're the coach here, but if there's a time block in my calendar where I've decided I'm going to spend 30 minutes, 5 days a week, finding dated listings, creating some sort of an eye-catching, whoa, that's different, that could get the phone to ring, and then creating a reason to have a conversation with the listing agent. You do that over 52 weeks, you're going to start to get some influence and earn the business of some of those listing agents. And that's just one of the strategies, by the way. There's 4 other kind of strategies inside of that that download, which I'll give you. I'll drop the download in the chat right now so you guys can share it. So feel free to, really, if that was interesting to you, go deeper and read through the rest of the implementation guide.
If I want to, thank you for doing that for all of us. If I want to get more information on the Loan Atlas, being able to get connected in to say, maybe this might be a fit for me, where do I go? How do I do this? Because I think you just gave huge value. I think a lot of people picked up a lot of things. The designing it, there you go. There's the information guide. And then can I go right into the Loan Atlas, and how do I easily navigate myself into your guys' system to where I could have a conversation?
Well, thank you for that. Let me share my screen one more time here, and I will try to answer that question. Let's see. Can you see the agent implementation guide here?
Yes, sir.
Okay, cool. So if you follow that link, you're going to end up at this page, and you can just go ahead and put in your name and information, and we'll email you the step-by-step implementation guide. If you're interested in learning more about the Loan Atlas, we have a $100 a month discount, bringing down the cost of the Loan Atlas for $249. You can listen to Tim give a brief overview of what the Loan Atlas is, and then it really runs through everything that is included in the Loan Atlas. And of course, you can also just email me at josh@joshmettle.com.
Oh, that's easy. You know, I noticed that you and Tim have a lot of hair. So do you guys take bald guys? Just asking for a friend.
You know, some of our best faculty members are follically challenged. I don't know if you know Steve Grossman, my friend Craig Strent. You know, they have their superpowers, but hair is not it. So absolutely, we're an equal opportunity faculty organization.
I love it. I love it. Josh, as we're closing out this, what's one or two things that an originator needs to hear today to be able to take their career to the next level?
Let me give you just 4 opportunities that I think, as it relates to business generation, where I think we can be focused on. Number one, we talked about the buyer agents, and they now have to massively up-level their value proposition to earn the right to ask for that 3% commission or whatever they're going to ask for. Number 2, there's that big opportunity with listing agents. So we hit those. I think we did a good job with that. The ones we didn't hit, number 3 and number 4 in terms of opportunities for me, is past clients. Look, your next buyer is likely already in a home and you helped them into that home, and there's pent-up demand building in that base, waiting for an opportunity to leapfrog for their next home. If we're not just simply calling in and saying, hey, Chris, it's Josh Mettle at Neo Home Loans. I helped you and your family buy the home at 123 Easy Street in 2020. Do you remember me? Of course I do. Yes. How are you? Man, I'm doing great. How's the family? How's the home? Oh, really good, man. Everything's going great. Great. Do you have just 30 seconds? I'd like to ask you 2 questions, right? Just re-engage that database, connect with them. Don't necessarily go into it that I'm trying to get a deal right now. Just connect and see if there's something you can do or help or educate. People have questions about the mortgage market, what's going on with home values. Gosh, we'd like to move, but the interest rate thing, just create a safe space to have a conversation where somebody can raise their hand and say, yeah, I've been thinking about pulling cash out, or yeah, I've been thinking about moving. It doesn't have to be, there doesn't have to be a lot of pressure when the whole goal of the conversation is just to connect. It's not to sell. So
and to care.
And to care. How are you? How are the kids? Is Johnny still doing T-ball? Like whatever your notes are in your CRM system. Hopefully, you know, you took some of those, you remember some of those things.
That's another call, Josh, on the CRM deal. That's another call.
Oh man, we could do like 20 calls on that one. That's a tough one. I mean, yeah. It's a tough one to teach in 60 minutes is the problem. It's, you know, you need like a boot camp for 3 months to get people through the whole process of that. And then the last one, I think, Chris, is pre-approved database. I know our team has hundreds. I might be shorting it. We might be thousands of pre-approved buyers that we've done the work on. They haven't been able to find homes. They watched as interest rates marched forward. Now they're on the sidelines. Reinvest in that past client database. Make a decision. I'm going to get all those loans, not 60%, not 70%. I'm going to get 100% of those loans. And I don't know when they're going to buy, but somewhere between now and 2020, end of 2025, rates are likely to come down. I'm likely to get that business, but I've got to reinvest in that. So those are the 4 places: buyers agents, listing agents, past clients, and our pre-approved pipeline from, you know, going back 18 months. That's where you spend your energy.
Yeah, that's money. Josh, thank you for coming on. I appreciate it. Look what you gave back to the community. You got a 17-point checklist. You got a roadmap easy to be able to get you some maybe questions, find out what the loan atlas is like, or a connection into you. What's that email again to you?
Josh@joshmettle.com.
Cool. Thanks again, Josh. I appreciate you.
My pleasure. Thanks, everybody. Have a great rest of your day. Go crush it.
Go crush it.